Welcome to this new video. Today we are performing a deep dive into the DNA of the market. Most traders look at a chart and see chaos. But what if I told you there's a hidden mathematical heartbeat under every price move? Today we are breaking down J.M. Hurst's secret weapons, spectral analysis, and phasing. This is the first step toward predicting market turns before they happen. Let's get into the science of cycles. By performing spectral and phasing analysis, we can create our own nominal model. Even though J.M. Hurst already created a very high-performing model, and we now have advanced software, I believe that knowing how to build one yourself helps you truly understand how market cycles work. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. The concept. Spectral analysis is the scan that finds the strongest rhythms. You can do this by hand with a pencil and a ruler, or use the power of Excel to run a Fourier transform. I'll show you how both work to give you a clear map. Phasing analysis is about finding the troughs. It's like timing the swing of a pendulum. The spectral analysis. Imagine the stock market is a wall of noise. Spectral analysis is like turning a radio dial. As you turn the dial, you are scanning different frequencies. Suddenly, at 102.5 FM, the music comes in clearly. In the market, we scan different day lengths. If we scan 20 days and the signal is very strong, we've found a dominant cycle. We are looking for the loudest cycles in the noise. How to do it manually? Let's use the visual scan. To do this on a chart without a computer, let's use this example. This Dow Jones Industrial Average chart starts from the year 2000. Pick a clear trough. On the far left of the chart, look for a significant bottom. In this case, the low formed in 2002. Identify the next major lows by following the chart all the way to the most recent important low, which occurred in April 2025. How calculate the duration? Find the time between those two dates. In our case, that is 23 years. Go back to the first trough and count how many lows occurred between those dates. Divide the total time by the number of lows. For this example, 23 years divided by the 5 major lows equals a 4.6-year cycle, or 55.2 month. We have now identified a potential 55.2-month cycle. Hurst suggests that except for the 54-month and 18-month cycle, which share a 3-to-1 ratio, all other cycles follow a 2-to-1 ratio. Therefore, after identifying the 55.2-month cycle, the next logical cycles to look for are 18.4 months, 40 weeks, 20 weeks, and so on. Spectral analysis is simply the act of marking which of those lengths hits the lows consistently. The ones that hit most often are your dominant cycles. How to do the spectral analysis in Microsoft Excel. The data scan. In Excel, we let the software do the tuning for us. Put your closing prices in column A. Use the data analysis, add in, and select Fourier analysis. This tool performs a fast Fourier transform, mathematically breaking the price into a list of different frequencies. Excel will provide a list of complex numbers. When you graph these, you get a periodogram, a chart with spikes. How to read the periodogram. The horizontal axis, X, is the frequency. The vertical axis, Y, is the power or magnitude. Find the highest peak and look at the frequency value under that spike. Locate that same frequency in your spreadsheet's frequency column. Look at the value in the next column, the period column. Examples. On my periodogram, we see a spike at frequency 7, the red column, at 0.0234. In the spreadsheet, I look for the corresponding frequency in the yellow cell. The value in the blue cell, the period, is 42.66, meaning we found a 42.6 6-month cycle. A second example is at frequency 26. The spike corresponds to a frequency of 0.097. Next to it, the period value is 10.24, representing a 10.24-month cycle, the equivalent of 40 weeks. Before we move on to our next topic, please take 2 seconds to hit the like button and subscribe. It really helps the channel grow and ensures you don't miss our next deep dive into market DNA. Now let's dive into part 2, the phasing analysis, the when. Spectral finds the what, but phasing finds the when. Together they create your trading map. Once we know the cycle length is 80 days, We switch to phasing to see exactly where we are in that journey. Are we at day 10 rising, or day 75 about to crash? The synergy. You can't phase a cycle you haven't discovered yet, and you can't trade a discovery you haven't phased. Using our Dow Jones Industrial Average chart, we identified the 42.66-month cycle as dominant. Let's label the first low in March 2020. From there, we look for shorter cycle lows. The next shorter cycle is 14.22 months, 42.66 month divide by 3. On manually spectral analysis, the monthly cycle was 18.4 months. Only 4.18 months difference compared to the Excel version. Counting forward the next 3 cycles. From March 2020 to June 2021, 15 months. To September 2022, 15 months. And to October 2023, 13 months. Applying analysis to future trading. Hurst established the principle of variation, meaning cycles vary. In length. They may run longer in a bear trend or shorter in a bull trend. To remain as accurate as possible, it is crucial to recalculate the average length each time a cycle ends. This is vital for building the FLD, future line of demarcation, which we will cover in the next video. My calculation method. The monthly time frame. I average the last 3 18-month cycles. In our chart, the lengths were 15, 15, and 13 month. 43 divided by 3 is equal to 14.33 month. This means our current 18-month cycle is averaging 14.33 month. We will use this new 14.33 month cycle for the next phasing. Why only 3 cycles? Because that equals the length of the next longer cycle, the 54-month cycle. Information from 9 years ago is too old to be relevant for today's trend. On weekly and daily time frames, I use the last 6 cycles to calculate the new average, then project that average into the future to find the next potential low. In conclusion, spectral analysis and phasing analysis are the 2 pillars of cycle trading. By mastering these, you stop guessing and start calculating. You move from seeing chaos to seeing the clear, mathematical heartbeat of the market. In our next video, we will take this data and build the FLD, the tool that finally gives us our entry and exit signals. If you found this deep dive helpful, make sure to hit the like button and subscribe so you don't miss the next step in our Hurst series.